What's up, everyone? Welcome to the Akuma Fund. Today we'll be discussing a company called BlackRock Capital. I've recently become a shareholder in BlackRock Capital after researching the company and very much liking what I found there. It's an excellent company, and we're going to go over the reasons why I decided to purchase. We're going to talk about the company, what the company does, what are the financials of the company, and finally, my valuation of the company, along with its industry. BlackRock Capital is a financial services company, and what that means is, in this particular context, is they sell ETFs. If you've ever heard of iShares, like IVV, anything with iShares is owned by BlackRock. They're kind of like an investment bank where they package together bonds and things like that. And they also do asset management, and so they're kind of like a mix between an investment bank and a gigantic like tech firm. It's an interesting combination. The reason why I bring up tech firm is they have this thing called Aladdin, and it's a risk management, asset allocation, stress test, and portfolio management asset manager. It's I tried my hardest to find like images of it and maybe figuring out like demos of how the software works, but a lot of it is kept under wraps, and I couldn't actually find any actual demonstrations of the of the software. However, it does have trillions of dollars under management, like tens of trillions of dollars under management. Use the Aladdin system. And also to mention the ETFs and the iShares and all that good stuff. There's $6.44 trillion that BlackRock Capital directly allocates for its customers. It's broken down into a few major sections. It's broken down in 27% in their active mutual funds. 38% is in like a non-ETF index, which is non-ETF indexes are quasi kind of managed funds, and then iShares is 28%, and they hold 7% cash in their assets that they manage. BlackRock has the power to just move the market in all sorts of ways, and whenever people bring up dumb money, they're probably talking about BlackRock and other institutional funds, but BlackRock has a huge sway over the markets because they can decide whether they let's to put it in perspective. If BlackRock decides that this company should be 2% instead of 1%, I mean that 1% might make up billions of dollars, and so where BlackRock decides to move is kind of where the market will go, because they just have so much power to influence the market. So it's really important to kind of see what they're doing, to see, okay, well, they're kind of switching more into bonds right now. Okay. So to see kind of, it's a good way to gauge where the market will be heading. And another interesting about them is they are kind of like an investment bank. They are an investment bank. Are they? Is BlackRock an investment bank? Probably not, because they don't really do like mergers and acquisitions and stuff like that, do they? They're not they're like a bank, but they're not like a bank. And the reason why I say that is because banks make loans to businesses to obviously to raise capital. But the thing about BlackRock is they have so much money that they can fund companies like banks. Okay, but the interesting thing is they don't have a debtor. A bank, whenever, like if Wells Fargo decides to make a loan to Tesla, and Tesla can't pay back its loan, and there's too many. They're not loaning. They're loaning like money out of thin air, but they're also loaning money that your grandma, my mom, me has put into that bank in order to make that loan. So there's a lot more risk to the entire economy when a bank makes a loan, because if they screw up and they can't pay back their customers, well, that customer has just lost their money, and their financials are ruined. If BlackRock decides to make an investment inside of a company, well, it's an investment. And if you lose it, And that's what happens with investments sometimes. There's no larger term ramifications for the rest of the economy besides the fact that people can lose money in the stock market, which people do all the time. But to sum it up in maybe even a simpler way is that BlackRock doesn't actually have any principal. It only invests other people's money. If we want to take a turn over to management, Larry Fink is the CEO and I believe chairman of the board of BlackRock. He's been with BlackRock since its inception when they were under Blackstone. He's oversaw many very, very, very excellent mergers and acquisitions. He merged with I think Barclays, something I forgot what the division, but he basically merged with their merged with Barclays to get certain parts of Barclays to get iShares. They made acquisitions from Merrill Lynch. They've done a lot of really like great acquisitions, and so that their inorganic growth is excellent. They never, I have yet to see them screw up on on an acquisition. They're also quite a relied upon institution. For example, during the 2008 crisis, the government basically tasked them for selling all the junk bonds and the mortgage securities. Because one of the problems with the financial crisis was the mortgage securities locked up too much capital in the markets. In order for the liquidity to continue in the market, they had to figure out a way to market the mortgage securities, and BlackRock helped out a lot with that. Larry Fink to me is the Steve Jobs of finance. He figured out how to make more money, He figured out how to make money like a bank, but not have the downsides of being heavily regulated. If you have the chance, I recommend listening to Larry Fink. Some of his interviews. He's quite an interesting guy. Definitely a person that I look up to. As for their financials, their assets under management has been growing hefty over the past few years. I believe, if I can find it. Yeah, their assets under management has gone from $4.6 trillion to $6.2 trillion in 2017, which the number, as I said earlier, is I think around 6.44 this year. The assets under management hasn't grown that much in 2018, but that's not very surprising due to the recent market downturn. But organic growth is from 2017 to 2018 maybe like a 1 or 2%. But if you look at the years before that, AUM was growing quite heftily. The main things you got to watch out for with BlackRock, if they really want to increase their AUM, is their acquisitions. They make really good acquisitions, so we got to see what's going on next with them. Some things that are growing very, very fast in their company are the retail investor side, retail investor iShares type. ETFs. For example, my Fidelity account, my Fidelity account allows commission-free trading for any iShares brokerage account, for any iShares ETFs. Excuse me. I believe the AUM in that sector is around 600 trillion, and I mentioned earlier what the breakdown was for their assets under management. Their revenue has been growing heftily from 11.4 billion to 11.15 billion to a big jump this year, last year in 2017 to $12.5 billion of revenue. Net income growing heftily too since in 2017. So another really beautiful thing about this company is they have gigantic margins. They have they have a 44.1% margin, which is just mind-boggling, honestly. I guess you don't have much overhead when all you're doing is just selling a packaged financial good, huh? So they're exceptionally profitable company. The diluted earnings is growing quite heftily due to large share buybacks. If you look in 2016, they were at a 1904 diluted earnings on a GAAP basis, and then jumped to just over $30 earnings per share. Just wanted to mention, guys, that I forgot to mention the video, but their balance sheet is excellent. They've got $8.8 billion in cash. They have $5.03 billion in debt. So if they wanted to, they could just buy. They could just be a debt-free company. Who knows? Maybe the debt has some tax advantages or something. But they have an excellent balance sheet. They've been growing their dividend quite fast, honestly. Year over year, 15%, 10%, double digits consistently. And they consistently beat the market on a long-term basis if you compare them against the S&P 500, because they basically are the market, but they make money off of the market, if that makes any sense. So whenever you do buy the S&P 500, the S&P 500 might go up, it might go down, and along with the S&P going up, so does their assets under management. But the whole time they're just collecting fees and fees and fees on top of it. So BlackRock just beats the S&P 500. It almost tracks it like a mirror. Well, I like the company a lot because there's no real competitive threats here. BlackRock is a one-of-a-kind company. They've got an excellent management team. The valuation on it right now as we speak, let me just see. Right now, BlackRock Capital is going for $371 a share, which is basically its 52-week low. Its earnings per share is at just under $35, and it's running at a 10.63 PE with a forward PE of 13.37. So obviously, BlackRock does better in a bull market than a bad market, but that's worked into its valuation. I like the company a lot. Exceptionally profitable, 3.27 dividend yield. I'm buying this company not for the capital appreciation, but for the income. With that 3.27 dividend yield, I'm happy because they're growing that dividend hefty. If we take a look, 3 points. What is that? Like a three, almost a 3.6% dividend yield in 1 year. So I'm gonna be excited to see how this company performs with dividends over time. That's my play with BlackRock Capital. I love the valuation. I hope it keeps going lower. That starting dividend yield can keep going up and up and up and up. I'm gonna keep on buying the stock as long as its market cap stays under around $65-ish billion. Or the dividend yield stays above a 3. As long as those two things are met, I'm pretty happy with it. The payout ratio on the dividend is healthy. It's under, it's under about it's under 50, above 36 percent. Right now, it's at a 36% payout ratio. I'm very much pleased with this company. It's one of those big dogs that you're kind of surprised you don't know about until you know about it. If you guys aren't interested in investing in BlackRock Capital, listen to their conference calls. You'll understand the way that their takes on the market will almost guaranteed be where the market goes, because they own like 4% of the market. Anyways, that's perfect timing. My family has just got home. Thank you very much for watching. Akuma out.